investors, welcome to Proceemo, the value stock analyzer. Today is November 7th, and today's stock of the week comes in a jumbo 12-pack, but you have to pay a yearly membership fee to get in. I'm talking about the fan favorite Costco, of course, the membership-only wholesaler, retailer that you're all familiar with. If you're a member, then you already know. It's special. If you're not a member, like me, then you probably have friends and family telling you all the time about how amazing it is. I'm not here to debate the amazingness. Instead, let's take a look at the numbers and see if it's a stock worth owning. Don't forget to like and subscribe. Your support will help us continue making content just like this for you. Okay, at a first glance, what do we see? $486.41 a share. This is probably a stock you will not actually be buying in bulk. PE 37, earnings per share 13.14. We do have a dividend, which we will explore in just a little bit, and a market cap of $215 billion. We have our segmentation here, but honestly, I'm not super interested. Maybe there's some insight that you could draw from this, but I'm not exactly sure what that is. If you think there is, leave a comment below and we can explore it in a future video. Costco is down from a year ago, only about 7.5%. Though if we look here on April 7th, we did hit a peak of $608.05, which is about 10% higher than where we're at today. Honestly, with the economy and the market the way it is right now, down 7.5% in the last 12 months is pretty impressive. Its shareholders might just be as loyal as its customers. Coming down to my favorite, as you well know, implied growth. Implied growth is a calculation that tells us how much growth is baked into the stock price based on earnings today. This is not a surefire measurement. It's purely speculative, but that's the game we play, isn't it? The first thing I like to do with implied growth is compare it against our revenue growth. So our implied growth is 14.26%. Our last year's growth is 15.83%. Pretty close. Looking at a couple of years back, 17.49, 9.21, 7.86. If we come down here, we can see our averages. 3-year average, 14.18, and implied growth, 14.26. That is pretty close. It's actually really cool to see, and it's a really good sign that maybe this stock is priced exactly where it should be. If we compare it against earnings, we see similar numbers. 3-year average on earnings is 17%. That's growth. 16.99, 13.35 at the 10-year mark. All in all, solid start for Costco. But let's not stop here. Let's go to the scorecard. Implied growth over 5-year, average growth is 0.84. 1 would mean a stock is priced perfectly, over 1 would mean the stock is overvalued, and under 1 means undervalued. 0.84 is pretty close to fairly valued. I think that's impressive in this market. Liabilities over assets coming in heavy at 0.68. Now, we like to say a comfortable spot is 0.3 to 0.6. 0.68 is not too far over that sweet spot. I know it's red, but maybe should be yellow. I'm not too concerned about this one. Steady dividend is false, and it's actually false for one of the coolest reasons you'll see from a company. Let's actually go over to our dividends tab and see why. Notice anything interesting? In December 2020, there was a $10 distribution per share. This is not a typo. This is not a bug in Proceemo. Costco, in the last 10 years, has issued a special dividend to its shareholders as a reward for holding the stock and being owners. This is really incredible. It's not something that you see for most companies, especially of this size. If you subtract that anomaly, Costco actually does have an increasing or equal dividend for the past 10 distributions, from 70 cents in October 2020 to 90 cents of October of 2022 this year. Heading back to our scorecard, operating cash dividend ratio. This tells us a company's ability to continue paying a dividend. This is coming in at 4.93. A ratio of 4 is considered to be safe. Anything over 4 is a very healthy coverage ratio. I think Costco is in a very good position to continue paying that dividend and hopefully pay some special dividends in the near future. Market cap to revenue ratio is interesting. 0.95. Costco's market cap is $218 billion and revenue in 2021 was $226 billion. There's no special or magic value here. This ratio is tight because Costco is a retailer and retail has really slim margins. For higher margined businesses, we'd expect to see this a little bit higher, but this is really just fine for Costco. 5 years of increasing revenue, you bet. We have that checked off here. Assets greater than 120% of market cap is false. Not a huge concern. This is usually a nice little bonus when we do see it set. The fact that it's not set here is not too concerning. 3 years of average revenue growth greater than 10 years average revenue growth. Yep, we are checking that box. Increasing revenue growth rate for 3 years is false, is not the case. We've talked about this in our last video. This is actually really hard. We'd really only expect to see this from companies that are in a hyper growth mode. A company the size and as well established as Costco is going to have a hard time hitting this target. We have 5 years of assets greater than 150% of liabilities. Not the case. Again, this comes directly from the intelligent investor. If this is true, then you have a highly valuable company. It's not true for most companies. Again, not a concerning factor here at all. And then finally, revenue per employee coming in pretty strong, $746,000 per employee. I think this is fantastic value for a company with over 300,000 employees. Overall, do I think Costco is undervalued and should be scooped up immediately? Not really, but I think it's a strong blue chip stock that will keep going up in value and pay you a nice cash dividend along the way. The normal dividend distribution is actually kind of small, less than 1%, but the special dividend helps alleviate some of that. If you're looking for a stock to be a 10-bagger, this isn't it. But if you want slow, steady growth, then a little bit of Costco might be just what you need. That's it for today. Please like and subscribe if you found this helpful. And if you really want to support the channel, please go to Proceemo.com, subscribe to our monthly service to see analysis like this for $5 a month on all the stocks that you wish. And if you have a stock you'd like to see featured, please comment below. Thank you. Happy investing. Go find some value.